Good morning, everybody. I have a wonderful update to share about mortgage rates. I've been waiting for months to say this, but rates have finally taken a turn for a better. Now, I don't want to toot my horn on this too much because it's made a turn for all of the unexpected reasons. Back in October, I said, hey, I think rates are going to make a turn because this trade talk with China is going to falter. Well, actually, 2 weeks ago, China and the U.S. just signed their phase one deal. Now, that doesn't mean everything's all roses, but it does mean things are progressing. No, the reason why mortgage rates have dropped so suddenly in the last week or two is this dreaded coronavirus that's starting to spread throughout China and possibly around the world with documented cases in other countries. So let me show you a graph that I've been monitoring for you over the last 6 months. So the blue line is more or less where rates have been, and you can see in the summertime they dropped. This orange line where it starts here indicates on October 17th where I made my bold prediction of mortgage rates falling. Well, you can see for the most part for the last 4 months, the blue line has stayed higher than this baseline, but you can see just in the last couple weeks, we've seen one of the biggest 3-day drops in rates that we have seen in the last few months. Now you can see every other big drop has had a pretty quick rebound thereafter, and I think that that is poised to happen again. This coronavirus is a very dangerous thing from what I've been reading, but how much is it really impacting GDP around the world? I don't know. It's tough to say. Clearly the markets are thinking that it's going to have big impacts, and that's what happens to mortgage rates. They drop when people get scared, when money gets scared. They flee to safe places. And I read an interesting article over the weekend. Let me show it to you. It's from The Economist. I've referenced this magazine a number of times, but it's called The Great Treasuries Binge. This is an investor that is feasting on U.S. government bonds. So people all over the world are buying U.S. debt, and that is pushing rates on treasuries lower and mortgage rates following with it. And what's interesting in this article, I can forward it to you if you like, but this graph here shows which countries are buying the most of our government debt. Historically, China's always been the leader, but you can see in the last 5 years, the European Union, this light blue line, has actually been exceeding this. I bring this up to say that this coronavirus, even though it seems like it's a world away, it has money and investors all over the world scared, and you can see from that graph that the EU, Japan, China, they flee to buying government, U.S. specific government debt, which pushes those rates down. So mortgage rates are along for the ride. I've got a number of clients that have been watching this since October when I made my bold prediction, and one client in particular has seen rates drop almost 0.5%. So I'm going to get on the phone with them today and talk about locking in. If you have been sitting on the sidelines and thinking about a refinance to save money or to pull cash out, now might be the time to look at this, because again, a rebound might be coming in the next couple of days, but for now they're looking awesome. So thanks for tuning in, and let's stay in touch. Bye-bye.